Hey everyone, this episode is brought to you by Avalanche. Everyone's favorite red coin is a fan of On the Margin, and we are a fan of Avalanche as well. Talked about it on the program before. Avalanche is a very cool solution. Their subnets allow for a very scalable blockchain that's also interoperable at the same time. And it's not just me. The institutions are noticing and they're building on the evergreen subnets as well. You're going to be hearing all about some of those institutions later in the episode. For now, Avalanche, thanks for making this possible. Hey everyone, this episode is brought to you by Kinto, the safety first L2, accelerating the transition to an on chain financial system. You're going to be hearing all about them later in the episode, but for now, on with the program. All right, everyone, welcome back to another Roundup edition of On the Margin, aka Guys Emporium. Got Quinn, Tyler, Felix. Fellas, how we doing?
Look at Mr. Business over there. Mr. Soup.
So you gotta do a shout out for Felix. Just crushed his CFA exam, but I feel like I'm the one that just took my CFA exam.
I was going to say the dress is reversed here.
I'm on this New York cold brew that's got me absolutely cracked out today.
I think we're just going to let Quinn spin on this roundup here. He's going to bring the energy. I feel like the most fun story that happened this week is that we had the return of Roaring Kitty, aka Deep Fucking Value, aka Keith Gill. So for folks who might have forgotten about this story, this feels like a blast from the past a little bit. Like it's almost like when you remember the era of Tiger King in the lockdowns. It's like, man, I haven't thought about this guy in a long time. It takes you back. But we had the return of Roaring Kitty this week, who is the GameStop guy who made a ton of money on his position, and he created all of these videos and was sort of behind the pumping of the meme stocks back in 2021. And he just tweeted the lock-in meme on Twitter, and it led to, I think GameStop pumped something like as 100% that day, and then another 100% in overnight trading. So it also sort of coincided with a little bit of risk on behavior back in crypto, which I thought was interesting. And I think the angle that people are exploring is, right, is this actually kind of a signal to the market that we're ready to get a little bit more risk on? Is it just nothing and it's not super significant? What do you guys make of this entire story this week?
Should I break my whole release my whole thesis?
Give us the whole thesis.
I wanted to hold it, but I think I'm just too fired up. I gotta share it.
All right, fire it.
So it's I might be all over the place because I got to write it this weekend to get it together. But the corollaries I'm seeing between the traditional world and the crypto world are just too similar to ignore. From the micro days. Next week's NVIDIA earnings, the 22nd. Everybody's hedged, protected from downside. Vol is well supplied. And then the next day you have the ETH ETF potential date, which both of those, ETH is the most hedged asset out of the crypto majors. Both of those, barring catastrophe, should be bottoms or send off from there because you have the event risk removed. So I think the thing people are missing in all this ETH hate, ETH now the most hated. I still think it's probably overowned, but it's been the most hated. What people are missing is ETH price going down is not good for crypto because ETH is the bellwether alt, right? So if you have a worse enough performance over time of ETH, that's bad. And we're seeing now this bottom, and ETH actually, I think Sol does really well. I think NFTs on ETH in 21 is memes on Sol in 21. You can't fade that. And so I think that the point, I just tweeted it, but the banana zone, I actually think that's going to happen. I think it's going to be an everything rally. I'm seeing in the traditional world that everything rally, small caps are going to join into the AI movement. After we get NVIDIA next week, we're going to have the inflation trade. Everybody's told you from the policy side, inflation's here, but rates aren't going up. And in 2022, we had inflation here and rates fixing it. And every signal is saying inflation's here, but we're going to make sure growth is good. And so that's your signal. And I actually think we're going to a summer 21 type of event. There's an election to win. They're going to, go gung-ho on the liquidity until then. Mixed into all of this, and I'll try and wrap it up here, is all of the regulatory and the political stuff. What people are missing in the forest for the trees is it's now moved to what was a lose-lose 2022, 2023 environment for crypto. It was scorched earth. SBF just, crushed all of the Dems. Republicans then picked the other side, and it was this battle. it's now a win-win. The election in November, Trump put his foot down. Vivek's telling him to be pro crypto. He's bringing all these single issue voters. And actually, the craziest thing about this week is you had these Dems crossing the aisle on this SAB bill, which is unheard of, 12 months ago. And so now we're moving into this election period where Trump's got the lead. He's looking to put his neck on, foot on the neck of Dems here, and he's saying crypto, everybody come here, and the Dems are like, well, we have to play ball. And now it's a win-win, the election, which is the most important thing going forward. And so you're going to have both sides competing now to kind of disown the Gensler Warren thing. And you're going to get the Circle IPO this year. You're going to get rumors of the Solana ETF later this year. If the Trump, and so this is just all one trade, supportive macro, supportive micro, and, pick your asset, and we're gone.
Before Tyler or Felix, you respond, Quinn, you used a technical term in there. I just want to make sure the users understand the banana zone.
That's right. So
what is the banana zone?
The banana zone is again, this is all together. It all is coming together in my head. You had Raul's peak in 21. He got royally crapped on. Everyone chirped him, and then he tweets this banana zone thing about we're heading into the crypto summer. And it's this revenge of 2021. You have GameStop, memery in traditional world. 2021's coming back, and it all got hated on. And so maybe the real echo bubble is actually going into this election, and Raul's going to stomp on everyone, all the haters who are stomping on his grave. That's what I think.
You have to say it in an English accent. The banana zone.
The banana zone.
Nate.
Just hits different. It's different in an English accent.
I used to work for Raul. But
it's like the Winnie the Pooh meme where he says it like banana zone in American accent, but like the fancy Pooh's like the banana zone.
Yeah.
Banana zone is real. Like my framework for that is, people often get confused that what's good for the economy isn't often always good for stocks or equities. And for the past 6 to 8 months or so, we've had this almost economic Goldilocks environment where GDP growth has been strong. We've had some disinflation that's continued. That's starting to hit a wall a bit now. If you look at the CPI prints, if you're calling for a sub 3% CPI print, you're basically calling that owners equivalent rent is going to actually finally catch up to the downside and get lower. I don't really see that happening. I think we keep ranging between this 3 and 5%. But overall, that's been really great for the economy, but that's not always good for stocks. And now what we're starting to see is that we're starting to get this beginning of a bit of a trend of a slowdown in the economy. And generally speaking, this phase of going from like an economic Goldilocks phase to where the slowdown actually is real and the Fed is potentially starting to cut rates, that's the banana zone. That's where long duration does its best work. And, people in TradFi call it long duration, people in crypto just call it Memecoins. But overall, that speculative stuff, I don't think it's just a coincidence that we're starting to see these pop off right at this moment. I think gone is the time to be buying, small cap value stocks and that sort of thing. Like that's the long economy trade. But now we're looking at the long duration trade. And I think that goes on for a while. Now, the thing is that we've been going through this cycle for the past year and a half or so, where we basically get a few dovish indicators and then financial conditions just front run that. We start to price in cuts. All this stuff happens. And then we get this small phase again of tightening, which is basically what we've gone through the last couple months. And that cycle just keeps repeating. And people get really frustrated because they see this cycle occur and they're like, why is Powell just letting this cycle keep going and going and going? Why isn't he just actually getting ahead of it and stopping it for good and actually letting things tighten before he loosens on the margin? So I think that totally aligns with this whole banana zone thing or whatever we want to call it. But I'm also super bullish here.
My general inclination is to always fade the guy wearing a suit. But in this case, I'm going to agree too. And I got a couple good charts for you. This is from Scott Rubner. He puts out probably the best flow related email weekly from Goldman Sachs. So give him a shout out. This says off exchange volume as a percentage of all U.S. equities traded yesterday was 51.6%, the highest level on record. This is basically saying retail, which is off exchange, is back. And, if you look at, this is not, investment advice, but check out Robinhood breaking 20 today, which was like basically a resistance on weekly. I mean,
Look at Quinn.
this is
Big
a
old
weekly
grin.
chart that's just broken out to the upside. And that's like really telling that something's definitely changed here. So I agree with you guys there. And then to boot, if you go to slide 14, 15, and 16, these are just some seasonality charts of what happens from the VIX, EEM, and the last one is the dollar. So if you go to the VIX specifically, heading into the summer months, just look at the top row, which is a 10-year average. June is somewhat subdued volatility, but July is usually the worst month for VIX performance, meaning VIX generally falls in July because everyone's on vacation. It's seasonally, like if you buy volatility in July, nothing trades. Realized vol is so slow. All right, now go to the next one. This is EEM, which seasonally, the best performing months for EEM is June and July. So if you're going to get, and so what I think is interesting here is like, everyone's like, oh, Powell's not going to ease. Powell's not going to ease. But what's happening is if you look at European markets, they're easing or about to ease, and they're at new highs. So the euro is actually strengthening, right? Which is causing inflows into emerging markets and potentially leaving the US. So it's not necessarily the dollar doesn't have to get weaker because people are anticipating easing. Dollar can get weaker just because money is going to a different market, right? And so I think that's what a lot of people are missing here. And so the third one shows the dollar seasonally in June and July, which basically is like two of the weakest months for the dollar seasonally on a 10-year average. So, to add to the banana zone, we're heading into seasonally weak volatility, seasonally weak dollar, and, risk assets where global liquidity by China is turning up. Global liquidity is turning up pretty much across the board. We're seeing volatility across equities, credit, emerging market currencies, oil. Look at all those just dead flat. Now, we could get into some complacency here, but like there's more risk of a melt up to me than, a crash, in my opinion, for all the doomsayers. Like the credit markets are telling the story right now. Credit spreads are in, we talk about this every week, but that leads everything. And until we get a real skirmish in the credit markets, the path of least resistance is higher.
Tyler, I've been seeing these charts, and I'm shaking. I'm so bullish right now. If we just ended this podcast here, I think we've done our duty for the day for all this.
Now we got to fade ourselves a little bit. Give me the contra, Mike. Give me the contra.
Hey everyone, this episode is brought to you by Avalanche. Avalanche is a leading network of blockchain, which is giving access to some of the world's largest financial institutions to experiment and build on crypto rails. I'm a big fan of Avalanche. I've talked about it on this program before. The Subnet architecture leverages some of the best parts of IBC over in Cosmos, the interoperability protocol, and the rollups on Ethereum, with the result that if you're a financial institution, you can build on something that's highly interoperable, but also customizable and scalable. And it's not just me. Many of the largest institutions in the world are taking notice. And a couple examples of folks who are building on evergreen subnets include Onyx by JP Morgan's. They leveraged an evergreen subnet to explore how tokenization can revolutionize the asset and wealth management industry. Citi and the DTCC digital assets are testing private market tokenization on the Avalanche Spruce testnet with Wellington and Wisdom Tree. So again, some of the largest financial institutions in the entire world are building on Avalanche. Avalanche Evergreen provides a suite of institutional blockchain deployments, customizations, and tooling designed to address company-specific and industry-wide requirements for financial services. So join the institutional investors that are choosing Avalanche today. Go to avax.network/evergreen. Again, that's avax.network/evergreen and join the revolution. Avalanche, thanks very much for making this episode possible. This episode is brought to you by Kinto, the safety-first layer 2 that is accelerating the transition to the on-chain financial system.
Now, I know we're all very excited about tokenization. Larry Fink certainly is. He's on CNBC talking about it all the time. And I know we're all very excited about L2s. Here's the problem though. If we want L2s to onboard the financial system, there's a lot of stuff that we still need. And Kinto is basically rolling out solutions for that. So one, it features user-owned KYC, which is just table stakes for our regulated friends. And if we want the institutional capital to come in, Kinto offers a really good solution for that. They also have native account abstraction that solves some of the largest problems with onboarding in terms of security and user experience today, which is still very confusing. So if we want to bring more folks onto Ethereum, Kinto is the way to do that. And if you believe in this on-chain financial system and you actually want to get more active in Kinto and become a founding member, you should join their launch program, which is Engine. That's ENGN. You can see a link in the show notes. So if you're a part of that, you can do things like participate in Kinto governance, the launch ceremony, you can priority access to product launches on Kinto, you get reduced fees and unique discounts on products launched on Kinto. So overall, if you want to be a part of Kinto and the mission that they have, I would go click the link, join the Engine program, and thank me later.
No, dude, I was just gonna say, I gotta give Raul Paul his due because, you know, that first of all, that guy, he's put out so much good content over the years, and I just don't think he deserved all of the crap that he got at the end of the 2021 cycle. And I love that he's out here just calling it the banana zone. That's, you know what energy that has here? I actually found, this is one of my favorite slides of all time. Just because we're doing throwbacks here, talking about Roaring Kitty and stuff. This is one of my favorite slides ever.
Also, he was super bullish Solana at like $15, and I don't know.
Yeah,
like crypto Twitter is just so short-term mindset. I mean, they're roasting Michael Saylor for like a year and a half, and like now that he's been proved right, they're revering him again. It's such short-term mindset oriented. It's ridiculous.
Yeah, it's very short-term. But that's what the banana zone reminds me of, this slide, which is the EBITDA slide that Masayoshi-san showed, which is hysterical. And honestly, people were like, I don't think people realized what like a big swing in move this was. It's like, I have so much money and I'm so successful. I'm not going to go through the bullshit of constructing fake numbers. It's going to go up. Like, you want to see a chart going up to the right? Here's a little clip art for you. Take it or leave it. Like,
That is so good.
You know, everyone was like, oh, he didn't even do the work. It's like, yeah, he doesn't need to. He's going to turn it around. You know, this was, honestly, I just don't think this guy got enough credit for this slide. This is my favorite slide I've ever seen. So
Also,
that basically is the banana zone, and I love this energy.
The chart he had in that same deck too, of like the drop with the unicorns on it, just kind of going down and then flying up as like the valley of coronavirus. That was the best presentation I've ever seen.
Oh, you know what it was? It was honest. It was an honest presentation. It was like, yeah, have you ever been like on the sell side of anything, like trying to come up with numbers? Like, yeah, we all know, right? The numbers are going to end up going up and to the right, and this was just a much more honest version of it. So yeah, I mean, you guys have a much better sense of like the short-term price machinations than me. I'm with you. I think I was feeling when the Bitcoin ETFs got approved and there were these monster inflow numbers that were getting printed, and I got this sort of flashback to what it felt like in 2021 when there was the number printer go burr memes. There were some new Bitcoin accounts that were getting spun up. I saw calls for Bitcoin going to 1 million, and I didn't really react strongly enough on this, but I was like, I have seen this movie. I know what it feels like to be here. And there's one internal tell that I have when I start adding up my total liquid net worth. It's like, it's always a bearish sign. And I was doing it. I was like, it's this much. And I was like, oh, buddy, you're in trouble. Like you're, and now, if you looked, I probably haven't checked. I've like stopped checking CoinGecko entirely. My boss sent me my old boss who I got to buy Solana like a year ago. He sends me price updates, and he sent me that it was up today. I didn't even know that it was up today. So that's bullish. Like if I've stopped checking the price,
Mike,
this is the time to buy.
Because you're in another level of wealth now with Blockworks growing so much. What happened, bro?
Yeah, look. The liquid stuff is what I still check and think about on a daily basis. So yeah, man. But my old boss is hilarious too. He sends me Venmos when the price goes down. He thinks it's a hilarious little joke. Yeah, he's up. You know, I got him in at like sub $20, and like Solana will go down 25%. He sends me a Venmo. Like
that is so unreal, dude.
This is why I pretty much
what I'm holding.
This is why I don't recommend crypto to most people or talk about it to most people in real life, because I don't want to be dealing with that. Like,
I had a similar situation. I was actually up in New York seeing some people, and this was earlier in the year. This guy, when I left TradFi, I told him, to buy crypto, and he made money, and then he round tripped it because he didn't sell. And then he said, "What should I do now?" I said, "Well, buy Solana and rotate everything you have into Solana." And I did it at he's up like 2x on the Solana, and meanwhile ETH is like flatter down. And the April weekend that we had the sell off, Solana went down to whatever. He texts me, "Dude, what's going on?" I'm like, "I just gave you a 2x in like 3 months. Do not hit me up with this bull crap right now."
Yeah, I love that. What's going on? More sellers than buyers.
Yeah.
More people are selling than buying today. That is what is happening.
It's called Tuesday.
Yeah, it's like you have to take them to the water, give them the water to drink, and then like because you didn't tell people to sell, it's like your fault after you gave them the like 5-bagger.
Well, look, maybe what we could do is just quickly adopt, since we're also bulled up here, a Contra View that is a bit bearish. I know Bob Elliott and Nancy Constant have been putting out some good, well, thought out, well researched takes that, to be bullish here, you're basically just betting on the continuation of pricing in rate cuts, because that's what's been driving most of this market higher in the last couple of weeks. I feel like that's somewhat of a valid point. I mean, obviously we've seen some dovishness get priced in the market relatively, but I think there's also a lot more at play here. What do you guys think?
Buybacks, people underestimate, like, the market is shrinking. There's the net supply of equities keeps shrinking every year globally, because like the incentives to stay private are just so good. There's not really new supply coming. And then you just have this massive credit market that you can keep issuing debt and buying back your stock on a $1 trillion per year run rate. So like, you don't have to bet on the Fed. Like, look, I'm kind of in the Zervos camp where it's like, dude, the Fed, I look at the 2s to 10s curve every day. It's down. Like, it's flattened even more. And so like, it's just a flat line of duration, and you have this engine of just buybacks taking supply off the market. And so your balance sheet keeps getting better and better. It's kind of an interesting phenomenon. So I don't think it's just Fed easing. It's just stultifying volatility in global markets.
I have a strong view here, and I'm just spilling the beans. Luckily I'm already long, so it's fine. But the thing that they're missing, they're so in the weeds, these guys. Like they're the absolute experts on QRA and the technicalities, and you want to be listening to everything they're saying. Zoom out though, and just rewind the clock a little bit. The first big intervention covert was October 2022 when we had the gilt crisis. Everybody stepped in, central banks, they rolled yields, they rolled the dollar. Second, March 2023 banking crisis. They stepped in, provided liquidity, rolled yields, rolled the dollar. Third, October 2023, U.S. Sovereign yield crisis. You had Santorelli or whatever on CNBC calling for 13% on the 10-year. QRA rolled the dollar, rolled the yield. This time, QRA wasn't super great. Okay, sure. But then what happened? Dovish Fed, we're going to support growth and unemployment versus inflation. Coordination with central banks, Fed reducing the runoff with a little, kiss to 35 instead of 30. And that's adding almost 500 billion of liquidity annually. And then a couple hours later, coordination with the BOJ, Monetary Authority of Japan, to crank the yen lower. It's all there. This is the now 4th or 5th time every 6 months for the last 2 years, and they intervened.
This has been going on for 15 years though. And for the first 10, I was like, oh, it's going to unravel. You can't control everything that much. But the truth is you can control everything. There's just, costs to it, which is generally the middle class and the lower income section of the economy. And like, that's the vol controllers. Boomer politicians are not going to let this thing go unless there is a geopolitical event or kinetic war that they can't control.
Yeah. I want to read this tweet that I saw the other day. I think it encapsulates this. And it's a lot of this, I think, generational arbitrage that we keep talking about. I'll just read it out from a DM I sent earlier today that I think is relevant to share to a large audience. This market is messing with the old school traders. Many are in complete disbelief of this rally and market dynamics. I only know of a few old school guys that are able to lay down years of accumulated learning and reactions to macro. Everything that happened post 08 really messed with people's perception of reality. They're missing the entire point of what drove inflation, what's driving the economy now, and they're focusing on the negatives. Trade what's in front of you, not your bias. And I think just really sums up a lot of what we keep talking about, where there's some of these younger people that are able to latch onto this narrative market that we live in now, that's driven by, yes, narratives, but also these more, maybe cronyistic incentives of again, like controlling vol, controlling markets, controlling all institutions more and more every year. And that's going against a lot of this like well-founded decades of macro trading logic. And it's really difficult to just let that go. And I think that's what we're seeing, is that there's some people that are shifting to this more narrative world and some that are having more trouble and are latching onto these more traditional principles. And I say that as somebody, again, who just wrote their CFA exam yesterday, where, it's just like, join the church of modern portfolio theory. Don't ever trade single stock and just lower your risk and, just get on the capital market line and just like press buy and never think again. So I get it, but like, there's a big, sea of change right now.
That was the best rant you've ever had. Fantastic. No, absolutely crushed it. Absolutely crushed that.
Hello, listeners of On the Margin. I've got good news for those of you who are in the crypto scene. Blockworks is bringing back Permissionless. We're going to be doing Permissionless 3, and this year we are heading west. So we're moving that out to Salt Lake City. That's going to be October 9th through 11th this year. We've got a phenomenal lineup of speakers for you. So we've got Balaji headlining. We've got Shriram, Munib, Matt Hogan of Bitwise, Jan Van Eck. This one's going to be a blast, guys. And I saw many of you out in London for DAS this year, and I hope to see you out in Salt Lake for Permissionless. And because y'all are such faithful listeners, we've got, if you use code MARGIN10, you're going to get 10% off your tickets. Appreciate you all. Hope to see you out there.
What do you think has changed post 08? We should get Joseph Wang, Fed guy, on here at one point. This is his shtick too. It's completely different set of dynamics in the post 08 world. But I'd be curious what you guys think of that distinction.
We were days away from like the world unraveling in 08, and it scared policymakers enough. I don't know if we were days away. Like, you can make the argument that they should have just let it be a free market and fix itself and recap everything, yada, yada, yada. But for politicians' sake, I think their natural reaction is, oh my God, our pensions. Oh my God, we're getting into retirement age. We need our asset values higher because like we need to be able to pull from our balance sheet, right? And those incentives really change my perception of things, because you're trying to fight this tide of power and centralized control that it won't go until the demographics change. There's a chokehold on that. That's just like, unless there is a geopolitical event, a war, that's not changing. Especially like you're seeing every volatility metric. As soon as it starts coming up, it's whack-a-mole. Those people, it's funny too, because all these guys that have become experts in these little idiosyncratic plumbing parts of the market, they're right, but they're actually telling the policymakers
the bull story.
They're telling them exactly what's wrong so they can smack the volatility. It's amazing. It's like, here's the problem in the market. Now let's go. Then they go and plug it. It's really a fascinating thing.
The byproduct of what you're saying is the reality we're in, where you can't have a recession when you're spending wartime deficits. That's just the bottom line, and it's so different from anything we've experienced in the last many decades, and being the world leader. And it's just a different regime. It's more emerging market style than it is developed.
Yeah, Janet Yellen famously said back in 2017 that we should expect no new financial crisis in our lifetimes. So
she's kind of been right, because
she got shit for that, but I think she's right. Yeah, exactly.
Yeah.
Well, so far she will be wrong when it's really big and bad.
Also, whose lifetime, Janet?
Yeah,
exactly. Yeah.
That so perfectly sums it up. In our lifetime, so for the next 7 years until the boomers let go.
Yeah,
I got a great meme. Stay tuned to the end, because I have a great meme of the week for this.
Oh God, All right,
Can we
let me-
just talk about memes for the last 30 minutes? Because
Yeah.
we're just
Wait, can I give one more like semi-serious take, and then we can go on to memes for the rest of it? Tyler, I love. I've never told you this, but I love that you call these people vol controllers, because that's exactly what they are. They are the people that are coming in and trying to control this enormous amount of complexity that exists in the financial system. But I think it exists in every single walk of life. Like, there are some people in a company that are like dealing with the nitty gritty, and they're trying to create a seamless experience for everyone else, or even in a family unit or whatever. There's like always a concept in a vol controller of like every single at every single level. And I don't know. I'd have a pretty inconsistent worldview on this, and I'd love to get your guys' perception on this, because on the one hand, I believe everything that we're saying. Like, these people messed up. They've created a really inequitable system. There are all of these problems that have come from maybe from '08, maybe from stuff before that, whatever it is. But also, if you're not in the weeds dealing with the actual ramifications of the fallout, then whatever ideology you have is a little bit of a luxury. Because if I was standing on the precipice looking at the world potentially falling into the ravine, I probably would have done exactly what these people did. And so, how do you guys think about that? Because I feel the whole world like really shifting populace right now. Like, there's this enormous wave of populism that's just rolling over everyone. And I don't know, it's inconsistent because I agree with so much of it, but I also I have a lot of empathy, weirdly, for these people. Also, I can't look myself in the mirror and say, if it had been me with my finger on the stick, or like my hand on the stick in '08, I mean, the consequence of you being wrong is like millions of people, going into poverty, and potentially it's like death. Like, real shit is on the
I
line.
think both sides are right. So you take '08 and take COVID. A response to address the acute problem of, global financial collapse or global health collapse is warranted, I think, in even the biggest COVID naysayers and the Peter Schiffs or whoever hates for the intervention in GFC. I think people say generally, like, okay, there's times where you use this tool and humanitarian purposes maybe trump the consequences. The problem is, just like when I go have a cocktail and then want 9 more because it was nice, you didn't need to be 3 helicopter money stimmy checks into 2021 through to end of the year when the problems were long gone. And same in GFC. You didn't need to be expanding your balance sheet for another 5 years when the problems were long, well under control. So I in the crisis moments, I think you have to act that way. I think what ultimately is the case, and we've seen it in all kind of political regimes, is power corrupts, and your incentive starts to shift from greater good to reelection. And that's where because I kind of sit in the middle. I say yes, that I think that response is necessary, but I I think there's some moral compromise that these people are doing by some of these actions, and that don't benefit the greater good. So I kind of see both sides, but ultimately, like, the reason we're in where we're in is not because of the instant response to these crises. It's because the ongoing that benefits the upper class, and that's the populism movement is a direct result, in my opinion. And it's, no matter who's elected, we could have the most peaceful youngest person president, and it's not going to change the trajectory of the next 10 years. It's going to change the path, but I don't think it changes much. Like, we're too far pendulum swung, in my opinion.
That's where I'm at as well. I definitely believe that the past 20 years or so has just been a stage was set, and it's just been playing out the game theory since. So, you have to rewind to, I don't know, maybe you want to go back to like long-term capital management bailouts to, point as the zero patient or whatever of when this game theory got set up. But for pretty much the last 20 years, I think, there's a reason why no matter which party gets elected into office, they spend. Like, it's the stage is set and people are just playing it out. And, to be fair, I do agree that, when you look at these individual programs, like extending QE into late 2021, that was pretty ridiculous. And you can blame forward guidance for that because they didn't have the maneuverability to rewind it quickly. But I think overall, it's just been this game has been set for us for the past 20 years or so, and individuals have just been playing it out because there's no real other option not to.
My big problem about the whole thing is less the bailouts. It's more putting up gates for the frontier markets to not function, where it's like, the Bill Gurley's regulation favors the incumbent. Like, it was harder to raise a hedge fund. It's been harder than ever to start a new hedge fund. How many hedge fund managers do you know that are, Quinn's probably the only one I know, but it's crypto, that is a younger hedge fund manager, because the fees to start a hedge fund got astronomical. So like, and now you have the Millenniums, the Citadels,
Why is that? Why did the fees go up for starting a hedge fund?
because like compliance costs go up, and then they create all these funky due diligence things that you have to do to satisfy, and then you need, I don't know, $100 million of assets just to start one now. And it's kind of crazy that the barriers are just like getting higher and higher. And that's just, it's for crypto too, right? Like, they try to create barriers even after bailing themselves out in these like giant corporations.
Is the
That's my issue. If you just made the frontiers open, you're like, we bailed ourselves out. Let's go open up crypto and cannabis and uranium, and like, let's do all these like crazy things for the frontiers. Let's go to space. I'd be like, yeah, all right, let's go to the future. But like, instead, it's stultified growth on the frontiers as you have these giant cathartic, bureaucratic, slow-moving leviathans of just blood sucking the middle class.
It's quite a picture.
Yeah.
Yeah, I agree with you. I that's why I just don't have a consistent worldview on it, because I see the problems on both sides. Definitely, things are not moving fast enough. There's not enough change that's happening in the US right now. I don't really know what the solution is. I think I agree with all of you guys that stage has been set. We just need to play it out. And one thing, again, you see across these different frameworks for how this generational change plays out. It's like the fourth turning stuff. It's the what's its face? The Bridgewater. I'm blanking on his name right now.
Ray Dalio,
the beautiful deleveraging. You need a real crisis to happen before real change, because otherwise the incentive to just status quo, if it ain't broke, don't fix it, is too strong. So people just push that along. That's why I think people are kind of down with Trump again for the most part now. He is the it's not working. He's the change candidate.
Throw the grenade in the room and see what happens. But you need that. Like, there's times you need that. Like, you're not going to convince. Go to Twitter and find like any argument, like Constant in his view versus something else, and they're both very, very smart people. But you don't just get across the line easy. Like, you sometimes need. That's what populism is. Mix it up. I don't know. It's not working, but I don't know what's going to work. But let's try it.
Do you guys want to talk about some of these Bitcoin filings that happened? So there were a couple big Bitcoin purchases which were made public recently, which were one, there was Millennium. So Millennium, obviously very large, very successful hedge funds. They're sort of known for their long, short, like delta neutral. So a lot of the delta neutral positions that they'll put on. So you guys would know better than me, but my sense is they're generally going for like spread trades, that type of thing. And then there's the other purchaser of a large $100 million Bitcoin position this week was the Wisconsin pension fund. Shout out Quinn. It's not alma mater, but your home state representing on the Bitcoin front. Good stuff.
Let's go. Alma mater too.
Yeah. Very, very different buyers, with obviously the pension fund being most like long only, very long-term oriented, and then Millennium most likely not being that way. But what was your guys' read in general on these two filings?
I think 13F filings create more noise and signal. Because a lot of these funds, like, they don't have to report their shorts, they don't have to report their derivative positions, and that muddies the water a lot. So yeah, you can make the argument like a fund like Millennium is not just going to take like a whatever vol asset Bitcoin is these days and just absolutely long the crap out of it. That's just not how hedge funds work. They live in a risk adjusted world. So to me, it's like, okay, there's got to be some other leg to this trade. The most rational inclination for me is that they're just doing the carry trade, because crypto's so degenerate that you can still basically long the spot and short the futures and collect that spread. So it makes sense to me that that's probably what's happening. And the reason they weren't able to put that on before is probably some sort of compliance reasons around like custody of spot Bitcoin. And now that they just have an ETF, it's super easy to do that. Then they can short the future side, which obviously has been clear for quite a long time now. But it reminds me a lot of what happened a couple years ago, where there was basically like net positioning of treasury futures from hedge funds was like record short, and people were saying, oh my god, we're going to get this huge bond squeeze, and like bonds are just going to rally like crazy, hedge funds are shorting the crap out of it, short squeeze. But it's because, again, it's a carry trade, and we're not looking at the other side of the positions because they don't have to report them, so it gets muddy. So that's my read on this whole thing.
On that point, Mike, can you pull up slide 17, because it's a little easier to articulate, and it also might give everyone kind of a historical backdrop of where we actually are in the Bitcoin cycle and how far we've come. But this is the Bitcoin futures curve. If you look at the orange line, that's where it is as of yesterday. So that's going out to 2025. Bitcoin is priced in December 2025 at like 75K. So you can buy spot, at 65, sell it at 75. If you do that on leverage, if you're Millennium, you have a big balance sheet. I don't know, you can make 30% a year. I don't know off that trade, but it's pretty enticing. But to give you a frame of reference, just in general, look where we were. This is May 17th of 2023 is the blue line. That was the futures curve back then, which is kind of nuts to think about. It was trading sub $30,000, how far it's gone up. And now it's, just in the last week or last month, the green line is the last month where the futures curve was a month ago. That's how far we've come in just, a month too. So it's kind of interesting. But I'm with Felix on this one. I think it's probably Millennium's doing the basis trade.
So I agree with you on the Millennium one. Like, there's always nuance here, right? Like, just depends on what the strategy is. But I think that the state of Wisconsin's pension, like that's a big deal. I mean, no one says, oh, they bought, so I can buy. But as in a benchmarked world, and speaking of benchmarks, another massive thing, MSTR added to the MSCI global equity indices. Okay, all of a sudden there's Bitcoin exposure in your global equity indices that everybody in the world is benchmarked to. And then you see your peer and competitor putting up, buying $100 million of Bitcoin at the pension. And these are big events that create credibility, and liquidity begets liquidity. No one wants to be first. You want to be, everyone wants to achieve confirmation bias. And then in the backdrop, you also have the shepherd of IBIT, BlackRock's ETF, becoming the CEO at Vanguard, and Paul Ryan giving, another Wisconsin guy, shout out, giving one of the most educated takes I've ever heard from that high up of a politician on stablecoins. It's not that hard to make because it's so clear cut and obvious and beneficial for the government, the United States, and the dollar. But I've never heard a politician speak like that. And on any given day, if we were in March or February when the sentiment was different, I think each one of those headlines would have been 1K, 2K on Bitcoin's price, particularly the pension. So because we're in this different regime, we're how the market interprets bad news and good news. No one cared. And I told 3 people this week about the state of Wisconsin pension thing that are in the no, they're not crypto natives, but they're more TradFi, but they traffic, and they're like, oh wow, really? That's interesting. Like, and people are just kind of like in the lull. Crypto Twitter's over here arguing about stupid crap no one cares about, and completely missing the forest for the trees, that the trend is very strong here. And just because everyone's portfolio in crypto is denominated in low float, high FTV alts that are getting obliterated, they're not reaping the benefits.
Another question that these like pension funds and endowments should be asking themselves is, what is global reserve collateral? Like, you saw this China chart of China selling treasuries this week. I'm sure you saw it on Twitter. Foreign buyers are not, reinvesting in US treasuries anymore. And if you look at copper and metals and any of those things like gold, silver, gold is ripping right now. Silver's breaking out. The sovereigns, like China, is asking themselves, what is global reserve collateral? How do I recycle these trade dollars back into something that's going to be a store of value? And I think Wisconsin probably gets it. My boss, Mark, was one of the first guys in Bitcoin in the macro investment community. And he was talking to pension funds back in like 2015, 2016 about this. And, one of the large, pension funds in the middle of the country essentially told him, every single person here owns Bitcoin personally, but it's going to take a while to own it inside the pension fund. That's the irony, is like these things take a while, and then you have some trailblazers like Wisconsin, and then everyone's like, oh, well, Wisconsin did it, and then Mass Mutual did it, and then you get this kind of concentric circles of adoption type mentality. And I saw this at Franklin Templeton. They'd always ask the consultants, they'd be like, instead of being a true trailblazer, they'd ask consultants, what is everyone else doing? And then they'd do that thing. And that's where we're getting into that part of the cycle where, the CEO goes, well, what's everybody else doing? And it's like, God, this is institutionalized investment is so ridiculous, but that's how it works, because it's playing not to lose. You don't want to lose your money. So someone else has to make the decision first. So
Yeah, or lose your job. There's that risk too. You don't want to be the guy calling that out. So yeah, it takes time. And I think a lot of like the ETF holding argument of hot money versus actual allocators comes down to this thing of time horizons. Like hedge funds can just do the George Soros thing and buy first and research later, but pension funds need to spend many years and a lot of time before they actually start to allocate properly. And they do need that basically trackway that we can see now of regulation and regulatory clarity that's starting to emerge before they can really go in it.
Do you guys think that ETH, Quinn, you mentioned ETH underperforming earlier in this episode. Do you think that my framework for a long time has been that we need excitement about the ETH ETF for that to finally turn around? It's basically that's the only thing that's going to move it at this point. Are you in agreement with that or no?
Yes, exactly. Every metric from a technical basis, you look at call, put, skew, everything. People are just think about it, right? In 2021, everybody that knew anything about crypto told you all you need to do is hold ETH. It's going to 10K and you'll be rich forever and you'll buy a bunch of boats. That has to get rinsed. That's like the class. Raul at the top, he's like, I'm putting 5% of my position into ETH calls at the Pico top. It was so consensus. The boat was like this, everyone's over there, and that has to get straightened out. And so what we've seen absolute max pain for the last 2 years for all the big ETH heads, the .ETH. There's no more Bianco.ETH. Now he's on the Sol. Bianco.Sol probably. And so you have to rinse the sentiment, and we're there. And these events are capitulation events, barring a catastrophe, barring Gensler saying I'll die before ETH ETF is approved, like some dumb thing like that. It's a turning point in the market. Everybody's overhedged. It's not that bad. It's an event risk gone. And then we look forward to the next event, which is Trump up huge in the polls, which, by the way, when he won in 2016, he was down big in polls. And Gensler's out, Warren's out, and this whole mob is gone. And you get all these ETFs. So actually the interesting thing when I call this the everything rally is, like small caps joining the AI party. It's like ETH joining the Solana party. And actually this time in the cycle, people are lulled to sleep. Is it over? Are we back? Is it over? And no, we're just mid-cycle when everything but Bitcoin takes off. And there's huge catalysts on the horizon for it. And I actually think that Sol, memes on Sol or NFTs on ETH in 21, second mouse gets the cheese. It doesn't just stop, right? Like memes are continuing just like NFTs did. So I'm not fading Sol. I actually think over the next 3 to 6, Sol probably outperforms. You probably get a bout of outperformance from ETH after the rejection, but I think they both do really well. And, Bitcoin had its run. It always starts like that. It always moves on. And we're about to see that.
Let's reserve our right to change our minds so we don't get too cocky.
Yeah. No, our rights are well reserved. I might be on next week saying that this is all.
I missed it. To your point, though, the ratio almost looks like it bottomed. Like I'm looking at the ETH to Bitcoin ratio, and it hit like a RSI of 30 and just reversed really hard. So I don't know if anyone's paying attention to that, but that looks like it's been for sale for a year straight.
It basically tapped that like February 2021 little surge as well, looks like.
Yeah. So we'll watch it.
We'll see. ETH is further ahead on this like problem that all these L1s are going to face. I feel like we've talked about this on the show, but there's just so much fragmentation. Like retail doesn't buy the majors. Like retail's not driving the price of Bitcoin for the most part. And if you were investing in ETH back around that time when Raul, and we said nice things about Raul, so maybe we can poke a little fun with putting 5% of his net worth in calls, you only could buy ETH. But now you can buy all these L2s. Now you can buy all this shit, and that's what retail's buying. They're not buying ETH directly. So there's just
I saw a chart the other day of just the amount of like coin creation in the last few weeks because of things like Pump.Fun, where you can just launch a meme coin instantly. Is the dispersion and the amount of coins that can be created right now is absolutely insane. So it's just completely dispersing liquidity.
That is the strongest counterpoint, by the way, to the meme coin super cycle. Is just frankly, Pump.Fun might be equivalent to Sushi, the launch of Sushi Swap for DeFi Summer. Like Sushi Swap was like the Pico top of DeFi Summer, and there were all these mechanics. They created these things called pool twos. There were such strong incentives to farm these coins, but it also created so much liquidity that everyone that was holding a bag that was up like 50x and they never thought they would be able to sell it was able to dump it in size, and it just tanked the entire market. And Pump.Fun could be the equivalent of that for meme coins, because it's now so easy to spin up a meme coin. Like the incremental cost of doing that is nothing anymore. And this is what always happens.
It reminds me a lot of what we saw last cycle with NFTs. I was speculating on those pretty heavily, and it did quite well, but it was really interesting to see that first phase where there was about like 10 to 15 projects and liquidity could concentrate. But then it started to get to this like endless cycle where endless amount of NFTs were being launched, and that just spread out liquidity. And then he added protocols like Blur or whatever that made that analysis a lot more efficient and that buying efficient. And suddenly you had this inefficient market with 10 projects that could go to high heavens to the whole trade getting spread out. And it feels like that's what's happening in meme coins right now.
That effect of attention fragmentation, I've started to see a lot of different things through that lens. And there's like a right curve and a left curve. And the left curve is like, look at my picture of the dog with the hat. And the right curve is look at my intersubjective work token. But it's the same shit. It is the same. One is for intellectuals and one is for degens. But it's the same game that everyone's playing.
So true, man. It's so funny, like nerding out on like some new breakthrough technology that is only going to be relevant in 30 years. When you equate the two, it makes it pretty funny, and some people are probably so offended.
Yeah,
but it's kind of true.
I gotta ask some of these questions because I need it. No one ever talks about this, but what is the actual user metrics on these protocols? Because for market caps that are absolutely insane, no one, like, it's just like this ignored thing where they're like,
well, they're fake numbers that Shkreli's gonna ding you on.
Yeah. And I don't know. That's why I can't wrap my head around this stuff, because it's like, oh, like 2,000 people are using this thing and it's got a $2 billion market cap.
That's an argument for memes, because people are like, look, man, cut the shit. You're here to make money. I'm here to make money. Let's skip the like flowery language and go straight to the pure speculation of memes. And that's kind of the bull case, and it's kind of proved right so far. I mean, it's going to crash and burn when the cycle's over. It's just you got to figure out when that's going to be.
Yeah.
Right.
Yeah. I mean, I think there's a reason why people look at TVL versus daily active users, because TVL can make it look good, but really that's just 10 whales that are just PvPing people that just come in and get slaughtered. But it's much harder to make that case when you're looking at daily active users.
Yeah,
totally.
So true. Incentives, man. Like, look at every token after they end their incentive program, drop the token. It's one trend.
Have you guys heard this idea that crypto needs its iPhone moment? And there were all these apps in the early days of the internet. There's actually a game that got created called .bomb. And it was every stupid idea that crashed and burned during .com. And they all work now. It was like ride hailing. It was like pets.com. And now there's Chewy and there's Uber. And what was the thing that was missing? It was the iPhone. It was like you needed a computer in your hand that you could call your rideshare from. And you know what? I've seen so there's been some experimentation on this with the Solana Saga smartphone. Sui released a gaming device. these have been widely mocked and derided, but I'm starting to wonder if there's some hardware unlock that we haven't gotten to that would make a lot of this shit make way more sense.
This is an awesome point, Mike. And I think the answer, it's in hindsight, how simple is a mobile phone? It's like, oh, can we put the internet on my phone? Like, but it's so novel, but it's so simple. Now, I think stablecoins. I think it's stablecoins. People are like, oh, I can send money. Like, how big of a breakthrough is Venmo? Everybody uses Venmo, but Venmo, like, you're still taking counterparty risk, and it's not your bank, and all these things. Stablecoins is like, I have all my money on a device. I can, for the people that say if Trump wins, I'm leaving the country. You can be that person and have all your money on your device, and you self custody, and you're gone. There's a little bit in here for everybody. You can online shop in one click, and it's from your wallet. You send it around. It eliminates the need for a 9-to-5 bank. Once this legislation gets approved, once the big banks can start touching this stuff. And to me, that's the breakthrough. And then everyone's like, wow, everything I have can be denominated here. Why isn't my mortgage on there? And you get some of these like crazier ideas that today is like, mortgages on the blockchain, like that's never going to work. And then 5-10 years later, that it does, because everything's tokenized. So to me, that avenue has proven itself as the real only use case in crypto. To me is payments, volumes and stablecoins. And so I think that it's like in plain sight, and then things just stem from that.
So should we end on, there are three really important pieces of legislation right now that are moving through the Senate, and this touches on the whole political angle. And some folks probably saw that Blockworks published an op-ed which got a pretty strong reaction, I would say, last week. So yeah, there are three important pieces of legislation that are moving through right now, which is SAB 121, which allows for depository institutions to custody crypto on their balance sheets. There was a vote yesterday which passed the Senate, although we'll get into the politics angle later. Biden said he was going to veto it. There's the FIT bill, which is the market structure bill, and then there's the Stablecoin bill. Stablecoin bill is the biggest slam dunk, obvious. It's not even complicated on how you legislate it. You know who gave us a really good framework? SBF gave us a pretty good framework. I don't know if you guys remember, he actually was pretty right on this. He laid it out. So, but well, that aside, stablecoins feel like the easiest one to regulate. And I guess this is why politics has become such a hot button topic for people in crypto, because there's this really salient moment. I think we talked about it last week, where Biden said he would veto this slam dunk SAB 121 bill. The precedent for that, by the way, is administration blindly backs up the regulator at the time. So honestly, people are wondering if Biden's going to veto. He's probably going to veto this vote that went through. And at the same time, Trump supported his NFT homies out in Mar-a-Lago. And honestly, it was just this really salient thing for people in crypto to say, holy shit, you're going to shoot down this obvious legislation. It's bipartisan for once. Everyone wants it. It just feels so unfair, just such an obvious attack. I think it lended a lot of credence to the Ryan Selkis argument that crypto's future in the US is existential, based on who gets in the White House next year. And so we released this op-ed saying only a fool would vote on crypto alone, which understandably, I get it. It touched a nerve. I would say, putting on my Blockworks hat for a second, our objective is to make sure that anyone can come here and express an opinion. So fully back Molly Jane and her perspective there. But I also understand why people are upset with it at the same time. And I think it voiced a really interesting argument here, which is, on the one hand, there are people saying, look, you just got to side with whoever is on your team. This is how the world works. The Dems are firing at us. The Republicans want this shit. Go along with them. There's another perspective, which is honestly, a lot of the people who are in crypto today probably wouldn't have gotten in if it was branded this super right technology. And the other thing is that these things change over time. A really good example of this is in Iraq, right? It was the Republicans and Dick Cheney and Search for Oil being let's go invade these people. And now the Dems are let's go invade fucking Ukraine and Russia. And the Republic, these things switch 180 degrees. So aligning yourself permanently with one ideology, it might seem like it's a good move in the short run, but maybe it's not in the long run. So
yeah,
what do you guys think about that whole argument? I think that's a very
share the data point of how many people actually, read the
Yeah,
article.
okay, all right. I'll share. So this is a little alpha for the On the Margin listeners. But if you were on Twitter this weekend, it was probably your entire feed. It was like 48 hours of my feed. 2,000 people read this article. It was in the bottom 20% of articles that day, which was a Saturday. So, I don't want to out anyone, but no one read this thing. Like everyone read the headline and got enraged. And so
it's a microcosm of our society, dude. It's like, Twitter narrative actually informs the news. It's then the actual news. It's so ridiculous.
Yeah.
I mean, it's crazy. I definitely side with the more, I don't know, maybe you want to call it like Bitcoin fundamentalist side of things, which is I'm a big believer in like fix the money, fix the world. And that to me, it's rational to focus on the single issue of fixing money, because I feel like a lot of societal issues these days are derivatives of that issue, that money is somewhat broken. And so for me, I understand the case to make to solely focus on that. And I think a lot of the more OG Bitcoiners in the world that understand that are right, because you have civil upheaval because wealth inequality is so huge, because housing prices have been pumped over the last 10 years because the Fed has been buying MBS nonstop for some crazy reason, all to control the housing prices. So now this entire generation can't buy housing. Like, that stems from broken money. So for me, I totally understand the case to make to solely focus on that.
I agree.
We're also in this weird period of time. Have you guys heard about Carl Schmitt? He wrote this book called the Concept of the Political. He's an old political philosopher. And basically it's called the friend enemy distinction, where it's like you have to take sides. Like you're forced to take sides. And that sort of is coming back. But people don't realize, like, when you're on this side of the coin, you're a reflection of the opposite side of the coin. And I don't necessarily think things are that black and white. So that whole view of this Carl Schmitt view of lens of society, I don't think is a healthy thing for innovation and growth in general. Like you have to be able to like work with people, and that's how democracy has worked for years and years and years. So that's what I don't agree with.
That's sort of like a valid criticism, I think, of centrism a lot, is that you have to take a side. You can't just say, oh, I believe in both sides. And I say that as somebody who often takes the centrist view on things, but I think it's somewhat valid that you do have to sometimes take a strong opinion. And a lot of the times the centrists will take the cop out. I'm definitely guilty of that. So I do get that side of things.
I do as well. I'm also naturally a centrist and try to see all sides of the argument, almost to I've been people. Yeah, I saw David Hoffman was giving me some shit like, you get it, Mike, you're neutral. It's like, but I am now. I really do get both sides of it.
Credible neutrality. We're trying to achieve trustless and all these. You're like a new protocol, Mike.
If something burrows on like free speech, though, that's where I'm like, I will take a hard side.
I agree. I agree.
I'm just not down with like a lot of that stuff.
That's the biggest beef with the article, is someone telling me that I'm allowed or not allowed to vote one. No, I'm going to decide if I'm a single issue voter, if I'm a multi-issue voter, and it's going to change, and who cares? And that's my decision. That's like, I think, the beef with the article, and who cares? It's one person's opinion, and Blockworks should put it all out there.
So like, if you look at what drove me crazy about COVID is like the left, the administration kind of shut down some iconoclastic thought leaders like Jay Bhattacharya, and that drove me nuts, as a centrist, and vice versa. Then for this article, they're doing the same exact thing for the other person on the left, not necessarily in the same context per se, but I guess what I'm saying is, don't be the exact opposite of what you hated, right? Does that make sense?
I took this class when I was in college. It was a philosophy class or something like that, which, you can imagine the types of opinions that get tossed around during those classes. And this guy and someone expressed this opinion, which was extremely left, like pretty repressive opinion, I would say. And you guys have probably all been in a situation where it's like, man, I don't agree with that, but I'm not going to touch that with a 10-foot pole. Like, sure, that like I'm not getting anywhere near that. And some guy stood up and said, I don't agree with that. And the countries that have the harshest laws against hate speech are also the most repressive countries. And it's true. And I looked it up after, and it's like the countries with the harshest, like, hey, we protect hate speech and all that kind of stuff. You know who it is? It's like Turkey. It's like Venezuela. I mean, you just, all you got to do is look around into the world, and that's not an ideology that works out. So I'm with you.
Bringing it all together, I funny anecdote. This is a good story. When I first started, because I'm in the suit in my finance job out of school, my thick Midwestern accent. Oh, hey, how are you doing? Kind of sound like Felix a little bit. And this guy on the desk used to always make fun of me. Like I'd come in, I'd have Fridays. I'd be happy. I'm pumped. It's almost the weekend. I'm drinking my cold brew, so I'm absolutely fired up. He's like, "What, Quinn?" Every day he'd be like, "Quinn, you waved everybody on the subway this morning." He's like, He's like, "Do you get on the subway?" And you're like, "Oh, hey, how are you doing?" Like big Midwestern takes New York. And so I thought of that today, back in the city. But bringing it back is, you got to love the Midwesterners. Built different. Don't care what anybody's saying. They're just going about their business. I'm picturing the state of Wisconsin buying Bitcoin. There's all this stuff on both sides. They're just like, "Oh, hey, I think this makes sense. We're gonna get us some corn and putting it in the pension fund," and just ignoring it, just working hard and having their own view.
It's the heartland, baby.
We're used to getting crap from all we're the flyover state that no one pays attention to, and then you'll have like Harvard, wanted to emulate their strategies.
Dude, 100%. There's even within the U.S. There's one of the cool things about the U.S. that often gets, it's very, very different based on region. And I'm from Boston originally. I'm like definitely one of those like classic Northeasterners. Like I went to my version of humor in high school was me and my friends just ragging mercilessly on each other. It's just like like almost to the point of being really mean, and I had to really modulate that as I got older. But my whole family lives out of Montana now, and I see it out there. I'm like, I get why everyone moves out here. Did the baseline level of like stress and happiness in New York versus living in the woods is huge. Like,
I mean, I love living in the mountains. Like I live in a mountain town just north of Vancouver, and it's just like I love it. I go outside, I can go on a mountain bike trail within 5 minutes. It's huge for life, I think.
Yeah.
When are we recording on the margin off the grid at Felix's compound? I want to see some bears.
I want to see some bears.
I want to talk to Canadians.
Oh, yeah.
I want to get my accent, tuned back up after spending too much time outside the Midwest.
You know what we should do is, we didn't Quinn's in New York right now, but we didn't quite get our stuff together in time, which is on me. But we should do a live on the margin hang at some point. We'll plan far out if we could get all the fellas together live, and if listeners would be interested in doing that and doing a live edition of the Guys Emporium, that'd be a lot of fun.
if you're interested as a listener, lay your best Tyler roast in the comments.
Yeah. Yes. Yeah.
We got meme of the week. We got meme of the week time.
Oh yeah, meme of the week. Okay, this is a meme from Philip Pilkington. I don't know if he's English, but I felt like I had to say it in English accent. This is Anthony Blinken doing Keep on Rockin' in a Free World in Ukraine, which was the most cringe thing on Twitter. I don't know if you guys saw this, but he writes, "It is really the last ride for boomers. The mental model they operate with, this smattering of lyrics of old rock songs by Bruce Springsteen and Neil Young. The world they live in mentally no longer exists, and in trying to force it to exist, they destroy what's left." I was like,
oh boy,
dude, that's good. Because I watched it, I was like, oh my god,
yeah.
What?
You ever like, what were you thinking? I mean, what is the risk reward of doing something like that? Like, you're just,
dude, they don't know what's cool. They don't. It's like, they're really gonna love this. I'm a rock star, and everyone's over here, and we're gonna play a Rockin' in the Free World.
I think Jerome Powell's a big guitar player. They should have got him involved too.
Dude, yeah.
DJ Diesel. They should have brought DJ Diesel in. Do a little
this
remix.
Is insane. I love this.
Yeah.
My meme is I think there may be a little too inappropriate. The one I was dying in the middle, like 30 minutes ago when I think Mike, you were talking, that someone sent me all the memes around the Scotty Scheffler thing. He got arrested this morning going to his tee time at the PGA Championship, and I haven't read in the story. I'm just benefiting from the memes. And some of the videos of like putting music over his walk up, and then some of the memes about the police and stuff. Just search it on Twitter. It's good stuff.
All right.
Nailed it. Killed it.
Yeah.
Killed it quick.
Crushed.
They're inappropriate.
Okay. All right.
He drove over something going to the PGA Championship, and he's like the #1 golfer in the world. And and the cop like pulled hero mode and tried to like stop him, not knowing who he was, and like held onto his car. And then he drove like 10 yards or something. I might be getting it wrong. I don't really know. But then he got booked in jail, and the cop was like, "He's getting arrested. We're arresting him."
He got booked for felony. He might be going to jail. We'll see.
Dude, there's just no way. He's like a good guy too. Like out of anybody for it to happen.
Yeah, he won't go to jail.
Yeah, we didn't get to cover the Chamath dismantling. We'll save that for next time.
This is a good vibe show. We don't want to kill any, bad juju surrounding these bull calls. This is good to leave that out of this show.
Quinn's like, I'm not trying to jinx my bags here. We want to end on a positive note to send good karma out into the universe. Fellas, I think we can end it here. This was a fun one. See you next week.
Thanks, guys. Have a good weekend.